Hello and welcome back, everybody, to the CryptoArchivez podcast. Today we have a special guest with us from Stryke Protocol, Mr. 0xSaitama, who is the lead BD there, and he's going to be talking to us about on-chain options. So, welcome, Mr. Saitama.
Hello, hello. Thanks for having me.
How are you feeling?
Nice to. I'm feeling pretty good. Ready for it.
Ready? Okay, so let's just get straight into it. Can you give us a little intro about yourself, how you got into the space, and how you got affiliated with Stryke?
Yeah, sure. It was like a while ago, I would say, back in 2020, end of 2020, early 2021. Like on-chain stuff was like very really like anything DeFi related was really new back in the day, right? So like you had like these insane returns everywhere, right? Like with Olympus, Wonderland, and all these things. I just started like crypto, like dabbing into crypto, just because it was like an interesting concept for me. And like from there, I went to started dabbing into like different chains, right? L2s and stuff. Ended up on Arbitrum. And on Arbitrum, like the goated team that everybody was talking about was like Dopex, right? And Dopex, like everybody was, they were known for like being giga brains and stuff, right? So I was super interested, and I was writing already some content like left and right for like different protocols and stuff, and then I decided to let me try to like understand the concept that Dopex is going for. So I started writing a bit of like threads here and there about Dopex, and that's how I got noticed by the team, right? And the team, what's cool about the Dopex team was that the whole team was pretty much like community, like everybody that was hired from Dopex was from the community, right? So it was really cool because it was like just a bunch of guys that wanted to get together and build like the next frontier of like DeFi, right? The on-chain options portion of it. And yeah, like they said they liked my content. They asked me if I wanted to provide content for them. So I started writing content for them, and that's how I started with Dopex.
Very cool, very cool. And you've been working in the on-chain option space for some time now, and I've seen massive volatility and attention for this niche. So I wanted to ask you, what gives you conviction for building on-chain options?
Yeah, I mean, like derivatives, right? Like derivatives are like an important aspect of finance. I would say like one of the most important part of it. Like it's like the pipeline of everything in finance, right?
Right.
So you have like on chain, you have a lot of the primitives that exist on in TradFi in the traditional markets that have moved on chain, right? But options haven't. They still have. We're still in the beginning of options, right? And options, if you look at TradFi, is one of the most traded derivatives, or if not the most traded derivatives, right? So basically, like there's a place for options on chain. It's just a question of like figuring out how to make it work on chain, right? Because there are definitely a lot of the restraints of
Right.
that on chain basically have, right? Like for example, gas fees and latency and all these different things, right? That we have to face to actually make this a viable thing. But we're getting there, right? Like as the infrastructure improves and as the DApp layer as well improves, right? Like the how to use this infrastructure in an efficient manner, we can actually we'll get there at one point where we can make it as efficient as in TradFi, right?
Yeah, hopefully that's the goal. It would be nice
Yeah.
to see. Actually, bouncing off of that, what do you think has been the largest roadblocks for the adoption of on-chain options versus other speculative instruments, right? We have perps that have been doing pretty well on-chain, to be honest, even though they are significantly smaller than on centralized exchanges. It feels like there's a lot more attention and users and traders on them. And there's exchanges like Deribit who do like an incredible amount of options volume. But for on-chain, it feels like it's been a lot harder for these protocols to actually gain PMF.
Yeah, I mean, I would say it's normal, right? Because the constraints you have on chain, you don't have them on off chain, right? So it's a lot like the experience is a lot better off chain, but there are definitely some trade offs, right? When you're on chain, you have 24/7 markets. You have anybody can just like tap into like a wallet, have some coins in there, like, and start trading, right? Like it's decentralized, it's programmable money, right?
Right.
So it is good in that manner, but there are some trade-offs against that. Is that basically there's the latency problem, the gas fees, right? And that creates a lot of like for on-chain to be as efficient as off-chain, you'd have to like literally have like almost zero fees and the latency close to zero, right? Because that's what we're basically competing against, right?
Right.
Um, so now we're the idea like why did like these other primitives make it on chain and why didn't options, right? The thing with options is that they're really complex. It's not that only that they're complex, but it's also that they have large capital requirements. You have all these different parameters, for example, different expiry dates. You have different strikes, right? Like one, it's not like trading one asset, right? Like Bitcoin, for example, you'd have Bitcoin at 59, 50, at 60, at 61, 62. Every single one of these strikes would be like, would be an option of itself, right? You can think of it as a token for 59, for 60, right? Or depending on how many strikes you want. And then you have even the expiries, right? So that since you have so many like different parameters and all of these need to be fully collateralized, right? Because you don't have margin accounts on chain yet.
Right.
You are basically saying, look, we need all these different parameters to be fully collateralized, and that creates a lot of inefficiency. You have capital sitting there until like there's utilization that happens, right? So that was a lot of the initial constraints we were facing with our initial product at DopeX. We had the SSOVs. I don't know if you recall, but
I do. Yeah.
yeah, the SSOVs were pretty like I would say like it was an interesting model, right? We like it was like an order book, right? But we concentrated the order book over like 4 strikes, so the liquidity would flow more into like these strikes, allowing more depth into them. And then we would use the collateral within it to basically farm something, right? Like let's say you would deposit ETH, we would maybe deposit in the lending protocol, right? And that would allow to the depositors to receive a yield on top of that, right? So we were really trying to figure out how can we add efficiency to this inefficient model that's on chain right now, right? And yeah, like we've went through so many different products at DopeX. Like we've the way
Right.
we went, yeah, we threw stuff at the wall, saw what sticked, and like reiterated every time. Went back to the whiteboard, said, okay, let's try something else, right? And yeah, I think we'll get into Stryke later on, but that process of learning through every single iteration got us to where we are today, right?
Right. Yeah, it's good to hear. And you've been working in the on-chain options space for some time now, and have seen this. You've seen how it's changed and evolved over time. So, do you have any insights about how the space has changed and maybe how it might change in the future?
Yes, I would say it's definitely changed for the better, right? Like we've had the infrastructure improved by a lot, right? L2s came to be like something that like everybody uses now, right? Like it's the everybody's going, all the capital is flowing into L2s. Now we just recently had the blobs, right? The blobs reduced the transaction fees by a lot, right?
Right.
Which improves, like I mentioned at the beginning, right? It improves like the efficiency to get us closer to what centralized exchanges are, right? And yeah, like because of that, a lot of the options, like not only the options protocol, mostly like derivatives protocols are improving the DApp infrastructure to basically reflect that, right?
Mm-hmm.
So yeah, like I think we've definitely had some improvement. Also, like on the team side, a lot of like we've learned a lot, right? Like we went through so many phases in DeFi just in the past 3 years,
Yeah.
like airdrops. Then there was like liquidity mining, etc., right? Like so there were so many phases. Now restaking is happening now. Like now is the point meta, right?
Right.
It's DeFi it goes all over, right? We explore every area, and I think like the whole ecosystem improves and learns from everything that is happening.
Awesome. Yeah. And then one last personal kind of question before we get into Strike is just what sort of things still get you really excited about crypto right now?
Yeah, I mean, I would say definitely the fact that it's programmable money, right? Like it's decentralized and programmable money. So it's like something that was missing in the internet, right? The internet like moved with technology, right? But the financial space didn't move with technology. So now we're basically catching up to what the internet uh, has been doing for the past like 20 years. And yeah, like just the fact that you can have like stream like imagine your paycheck would be streamed, or like any type of like smart contracts, like just anybody can just like put money and like borrow against it, right? All these
Right.
different aspects in DeFi that you don't need to like KYC and all these things, right? KYC is a bit I would say like it's a bit of like regulatory, right? Like we don't know like where we're gonna go like from here on out, right? Like if we're gonna have to have maybe because Uniswap is gonna build some like hooks that are gonna have KYC, then
Right.
our most protocols gonna need that. Maybe it's gonna be KYC for like every country or something like that. But without talking about KYC regulation and all that, I think it's just the fact that anybody can just jump in, have access to the financial system is like, and in a programmable way, right, with smart contracts and stuff, is a big advancement like in tech.
Yeah, and we'd love to see this mainstream adoption of crypto as well. It's a much more efficient system, it feels like, and a much more decentralized system, obviously. So
Yeah.
yeah, so let's get into some strike questions. So I wanted to ask you about how the transition from DopeX to Strike has been, and maybe what sort of strategies you guys have implemented after you've learned these lessons in DopeX.
Yeah. So for us to transition to from DopeX to Strike, it was like it was a bit of like a harsh time, right? There was a lot going on, like the market was falling and everything. But like I mentioned, that the way we go about products is that we try it out, right? We're a startup, right? And any startup that doesn't just like go back to the whiteboard after they see something doesn't work is like it's a bad team, right? Because you can't just stick to something that doesn't work, right? You have to keep iterating until you find the actual product that's going to have product market fit, right? So we've tried a bunch of stuff, and finally came to a new product, which as of today called CLAM, right? Concentrated
Right.
liquidity, AMM for Strike, right? And this product is actually the product that we all believe on the team that will bring option adoption on chain. So it'll make option viable, and I'll explain the reason for that after when I explain a bit more on the product. But yeah, like the transition was like let's focus on this new product that we actually believe can make it viable, and let's rebrand across it around it, right? Because DopeX was more known for all the products we've launched in the past, and we didn't want to have everybody to think, okay, they still have those products, right? We want to rebrand across around this new product, which is something users have to try, right? Because this is like the next step for LPing on chain. So let us rebrand. Come check us out. You don't know what we're about, right? Come on Strike and see what the product is, and that'll give you like a new perspective of what Strike is, right?
Right. Right. Yeah. Hopefully, Strike will be able to do what DopeX hasn't been able to. But yeah. So you guys have been expanding to a lot of new chains. I've seen a Blast and a Base integration, and I know there's going to be a future Superseed integration on the way. So how has that been working out for you guys in terms of volume and users and all sorts of PMF, let's say?
For new deployments, right? Like we have a vision for Strike where, because derivatives allow us to play around with the cross chain compatibility, right? So the right now the strategy is, look, let's deploy on multiple chains for when cross chain comes available. So we're working on this new iteration of the product where you'll be able to trade options on any chain using cross chain liquidity, right? So you'll have deposits from Uniswap, from XDEX, and on Xchain, right? And all this liquidity will be aggregated, and you'll be able to trade for example, even on a chain that there's no liquidity, you'll be able to trade options with the depth of cross-chain liquidity, right? So that's something that derivatives allow us to do comparatively to a spot market, or like actually having the underlying assets. And this is something like even like I think the Ethereum Foundation is like working on, right? Like on improving the bridges that gap between.
Interoperability.
Yeah, exactly. They
Yeah.
have like a thing like that in the pipeline, but this is like still further out, like I would say like they said like 2026, 2027, right?
Right.
But with derivatives, this could happen right now, right? So this is something that we're definitely working on, and it'll definitely make like the on-chain options experience a lot better, right?
Yeah, that's very exciting to hear. Whole interoperability space, I think, will be really huge. So people who are able to take advantage of that will be doing very well. Yeah. Are there any plans to have Strike on other non-Ethereum chains in the future? Maybe Solana, Tron, Binance Smart Chain, or others?
Yes, like we're already just maybe a little alpha, but we're already planning to launch with on Binance Chain, right? Where we basically already partnered with PancakeSwap. Have them like they have us on their front end, right? So they like you could use trade options on PancakeSwap without even knowing that you're
Right.
actually using Strike. We're gonna probably collab. Like this is still a discussion, right? Like we're just like testing out the waters. But like the idea is like, look, let's also move on Binance Chain just because they have like a ton of users over there, right? We've also been talking with Tron. We've like even with what's his name the Sun guy, right? Like
You've been talking with Sun?
just Dustin Sun. We've been talking to
Wow,
Dustin
nice.
Sun, and yeah, like the problem with Tron is that they have like they have this weird thing with the way it's not EVM compatible, right? So there are some
Right.
little differences we need to do to actually get on there, and we've been working through that. But we have so much going on that where it's not priority right now,
Okay.
right? But at one point we'll definitely be there.
Get into that. Yeah, that'll be nice to see, especially on Tron now with their own version of Pump Fund. It feels like anybody who's taking advantage of that is doing well. So hopefully we'll see you guys on other chains. You guys have a nice
Yeah,
platform.
yeah, we'll be pretty much all over, right? So that's
For
the
sure.
idea. We want to be cross-chain compatible with any chain, right?
Yep. So I've also seen that you guys are offering your clam products on meme coins, and I know that TZ, who's the founder of Strike, is actually pretty bullish meme coins and meme coin communities. I wanted to ask, will providing option markets for meme coins continue to be a focus for you guys going forwards? And maybe dive into the meme coin thesis that you guys have for these option markets.
Well, bullish is a strong word, right?
Yeah.
Like, I mean, bullish for trading. I guess it would be a good way to put it, because the thing with meme coins is that you have like all the institutional capital and all that. They're used to trading like these like something that has like actual something back in it, right?
Right.
And the problem with that is that there's VCs, right? That they own a bunch of the tokens, and it's very manipulated. So you have a lot of these. Like what happened on chain is that you have all this retail that wants to start trading, but they don't want to get fucked by the institutions, right? So they're like, what can we do to actually start trading something that is actually traded by retail? So I believe that's how meme coins trading started, and that's why like it picked up so much attention, is because finally we got something that is for the people, right?
Right.
So you can trade that, and you actually know there's no manipulation happening. Maybe there is, but it's all a fair game, right? You can still
Yeah.
it's all a fair game at the end of the line, right? So I think definitely it's what pushed meme coins to be as attractive as they are. And like just the fact that you can speculate on something that is retail focused is attractive for a lot of people. So that's why we're bullish on trading it, right? Like that's why we can basically derive options out of that and allow users to trade those options on chain, right? All in like a permissionless way against like you would be trading against other retails, right? So it's a fun way to basically speculate, and it's like a bit of a casino in a way, right? But like
right.
a permissionless casino, right?
We love the casinos here in crypto land, but what are you
Yeah,
gonna
for
do?
sure.
Yeah, yeah, and I knew you guys offered options on Boop as well, and I remember seeing Teasy tweeting a lot about the Boop community and kind of trying to push Boop as a meme coin on Arbitrum, and it just goes to show like how much of an impact these types of tokens are actually having, right? So many DeFi coins are kind of dying at the moment, and meme coins, given that they have so much volume and so much demand in the space, seems like something obvious that you would pursue for option markets. So happy you guys are doing
Yeah.
that. To be honest,
I
yeah,
mean, we like the Boop guys, right? Like Boop is
right,
like a great meme, and yeah, I mean, like why not, right? Like why not
right.
like just
Take advantage
fund
of this.
something? Yeah, take advantage of this, right?
Yeah. Okay. So Um, I know you guys at Strike love composability and capital efficiency, especially with products like Clam. So, are there any plans for these capital efficient type of products coming onto Superseed in the future? Have you thought of any new crazy product designs? I know you guys have had a past with crazy product design ideas. So, anything cooking at a Strike?
Yeah, yeah, I mean, we have like a shit ton cooking. So,
Yeah, that's good to
like
hear.
in terms of like with Superseed, I was thinking about it, and there's definitely like some areas to explore. I definitely like the concept of Superseed, right? Like, it's what we like. Users are used to like borrowing and paying basically the fees to basically borrow, right? You pay
Right.
fees to whoever you're borrowing against, right? On with Superseed, you're basically borrowing and getting paid to borrow, and your collateral gets basically the position you're borrowing against, it gets slowly gets like paid out, right? So um, so yeah, I think it's definitely a cool concept, and I think there could be like some type of because at the end of the line, what is the strike model, right? The strike model is basically having a book, and this book basically users can derive an option market out of it, a spot market out of it, right? So you can maybe a perpetual market in the future. So there's a lot of a lot can come out of like liquidity provided on this book, right? So how can we integrate this with a lending protocol? Maybe we could have like unliquidable lending, right? Unliquidable lending would be something that could be definitely like explored as a new primitive. You could have also like for example, like if you have unliquidable lending, then you can borrow against those positions, and even have like leverage unliquidable lending, right? So
That's pretty
there's
insane, yeah.
definitely, yeah, it goes crazy, but there's stuff to explore, but we're still not there yet, right? Like
Okay, yeah,
we
yeah.
still need
It's
to
in the
work out
works.
like the infrastructure, making sure everything's good, and yeah.
Awesome, yeah. It'll be nice to see you guys there for sure. So let's get into some market related questions. Do you have any thoughts on majors in the upcoming months? It seems like rate cuts are being priced into markets right now, and we also have potential for a much more pro friendly or pro crypto friendly administration. So, what is maybe your current market outlook for the next few months?
Yeah, can I maybe like first like just I don't think I went through like exactly strike what it is, right? Like we
Okay,
went through a few questions. I just
yeah,
want to make sure that we have like a clear understanding for whoever
for the
wants to
viewers.
learn strike, right?
Okay,
Uh, so strike is basically a constant, like we're built on top of dexes, v3 dexes. The difference between, for example, okay, let's start first with Uniswap, right? If you go on Uniswap, why did Uniswap launch on mainnet, and why did they launch the way they did, right? Uniswap has been conscient of the gas fees and the leniency. They know about this, right? They know that for them to actually take market share off of centralized exchanges, they need to be as efficient as them. But how can you be efficient when, for example, on mainnet, Ethereum mainnet, you'll have like these huge gas fees, right?
right,
And if, for example, let's say the way the AMM on Uniswap works is that you have the like this order book, but that can be automated market making, right? So you deposit at a certain range, and within that range, you'd have your liquidity spread out within the whole range, right? Exactly at the same amount on every single tick, right? So why did they do it that way, right? So when they launched Uniswap v3, why didn't they allow for liquidity shaping, for example? This is something that on Strike, for example, it's possible because now with blobs and all that, the gas fees have actually decreased, so it allowed us to add these features. But for Uniswap, this wasn't possible back in the day, right? So when you deposit on Uniswap, you'd have exactly the same amount of liquidity on every single tick, and this was to improve the efficient, basically on the gas fees side, right, to stay something coherent, right? So the problem here is that if you have gas fees are expensive and you have liquidity that's deposited you can think of them as blocks, right? You'd have these blocks of liquidity being distributed perfectly across the whole order book. But when you look at centralized exchanges, they don't have their order book like that, right? Usually you look at a centralized exchange and you see that the order book is like a V-shaped type of order book, right? And you'd have a depth of like 2%, and that's where market makers, they make sure that depth is enough for it to fill to basically fill any order, right? And as orders basically fill the book, they constantly shift the liquidity like every second, for example, or every fraction of a second, right? But for us to recreate that V-shaped type of liquidity and to shift that liquidity constantly, it's not possible on chain, right? So that's why I'm saying on chain is not as efficient as off chain yet, right? So at Strike, we took the first step. Let's start by doing liquidity shaping, right? Let's start with this. That means that now we can recreate that V-shaped type of liquidity structure. But you would still deposit it at a wider range because you can't shift that liquidity. Like if you do liquidity shaping, that means you're depositing at every single tick a different amount, right? So if you're depositing at every single tick a different amount, that means that you're paying a gas fee for every deposit, right? Every tick is a gas fee. But since the gas fees with blobs is like a fraction of a penny, maybe depositing with a V-shaped type of V liquidity shape, right? It would cost you like 5 cents or 10 cents, right? But imagine 10 cents every second. It would still come out to be expensive, right? So like LPs, what they do is still provide a wide range. If you look at Uniswap, most of the liquidity is like from 2,000 to 4,000, for example, right? So you have like a wide range of liquidity because you don't want that reposition to happen all the time. You don't want to basically realize the impermanent loss, which basically then you need to swap, right? There's a bunch of stuff you need to do. So users, they deposit at a wider range, right? So for us, we can recreate that liquidity shaping, but still we're facing the problem that we'll need to widen the range because we don't want the gas fees to be too expensive. So now what does that for example, in Uniswap, let's say you would create that V shape and now you'd have a large range. What does that entail, right? That entails that the liquidity efficiency is not as optimal as the centralized exchange, because if you have a wide range and let's say ETH trades plus and minus 2% in one day, and you have a 10% range position, 8% of that position is not being utilized, right? Your capital is just sitting in the book, not doing anything. So that creates an inefficiency, right? An inefficiency that we can tap into. So that's where the idea of Strike came to be. We're like, okay, this is very inefficient. How can we improve the efficiency of this? So the idea of Strike was, okay, let's take the inefficiency and use that inefficiency. So what are LPs exposed to when they LP? They're basically short volatility. Short volatility, in other words, like in option terms, is basically being short covered call or short cash, right? So since we can tap into that liquidity, which are short, is basically just short liquidity, right? It allows us to derive an option market out of every single tick within that liquidity that's not being utilized. So that's the whole concept behind Strike, where we can say, look, allow the LPs to do more with their capital that's not being utilized, and allow them to earn from the capital that's sitting there by selling options, right? Being short, right? And not only that, but like there's a lot of like benefits that came out of that, right? Like when you trade on when you swap on Uniswap has a fixed pricing mechanism, which is like 30 bips or 5 bips, etc. Right, which is not the right way to price volatility. With options, you have a correct way to price volatility with the Black-Scholes and actual like the implied volatility is like implied, right? So the future volatility that it's expected. So you're pricing the collateral that's sitting within the pool to actually be sold at a correct pricing. So we're not only just improving the efficiency of Uniswap, but we're also adding a pricing mechanism that actually prices the volatility correctly. So all these little benefits, right? Like now you have like liquidity shaping, you have a better pricing system, you have more capital efficiency. All these little things are what we made us say, look, this is the next step of LPing on chain, right? We're still maybe not there to get to what centralized exchanges are, right? But from what we're doing is we're definitely improving the current situation with on-chain LPing. And yeah, like with this other things that come out of this is that now you can trade against any pairs, right? You can have ETH options against BTC, ETH options against X token, right? Or you can have against USDC, or you can literally create any option out of any against any underlying, right? So there's a lot of cool things that come out of this, and it'll just improve, right? Now we have margin zero. There's somebody that from our community that's building this other protocol that's built on top of this mechanism. It's all made out of hooks, right? So you have margin zero that's gonna build a hook that's gonna allow perpetual trading out of the same liquidity. So the vision here becomes not only that we can create options out of this liquidity, but that we can create any primitive out of this liquidity. The LPs, all they need to do is that, look, I'm my exposure is in permanent loss, so I'm short volatility. But what can I provide as on the other side as products for me to earn yield against this short volatility? And there'll be different protocols building on top of like this liquidity hub that. For example, we're doing options. You'll have the swap market. You have a perpetual market, a lending market at one point, right? So this is where maybe Superseed can come in, right? And the end line is it's all about using the liquidity as efficiently as possible, making it and allowing the LPs to choose what they want exposure to, right?
Nice, yeah, beautifully put. For all those who didn't understand claims very well,
it was probably a lot. It was probably a lot.
I think that was a decent amount, but if people are paying attention, I think it's very, very clear what you're talking about. Very good. So let's just finish out with some market-related questions, if that's all right. Sure. I wanted to ask you about your thoughts on majors in the upcoming months. It seems like rate cuts are being priced into markets, and we also have potential for a much more friendly crypto administration. So maybe tell us about your market outlook for crypto in the next few months.
I would say, to be honest, I'm bearish short term and bullish long term. Why am I bearish short term is just because I feel like liquidity, like retail liquidity is drying up. Like there's capital. If you look at like that is at all-time highs. I don't want to get into macros too much, but even though there's going to be like the rate cuts, are they too late to those rate cuts, right? Like everybody is like basically broke right now, right? So who's going to be buying the bags at the moment, right? So am I bullish right now? I mean, maybe there could be like some institutionals coming in and stuff, but I would be more hands off at the moment and wait. Maybe sell volatility with options and stuff, and long term maybe get back in the market, right? So, yeah, I mean, it's still like I'm not saying that it can't go it can't go up. If it could go up, it could go down, could do whatever.
Of course,
but it's too risky for me right now. Yeah.
Mm-hmm. Yeah, very interesting. Yeah, and hopefully, I mean, we'll see VCs come back into the space with strength again. I think that was another one of the reasons why we had such a big cycle maybe last cycles. There's just so many people being able to fund so many different things. A lot of them were funds, obviously, and then there was also people lending out maybe a little bit fraudulently, illegally, which helped pump the markets a little bit. But hopefully we'll have a better maybe market cycle this time, a more safe and regulated one. We'll see what happens.
Yeah.
But appreciate your
Uh,
insight.
It was definitely like a hype cycle, the last one, right? Like
Oh yeah,
now if you look at the cycle of this time, it's pretty much look, hold ETH and or
yeah,
USDC or any stablecoin, and just farm whatever you can and dump the rewards. That's
yeah,
basically
yeah.
what people have been
Yep,
doing for the
pretty
past
much.
year. So that's why like you see all the DeFi tokens just like trending to
Just
zero.
nuke.
It's pretty
Yeah,
sad, but I mean that's what they're doing, right? The institutions. So yeah.
right. Yeah, and they all have these like super highly evaluated tokens on launch that just huge vesting schedules, huge token unlocks, no revenues, nothing. Yeah,
Yeah. I mean,
yeah,
it's for them. It's like, why would you hold something that there's no regulatory clarity? So it could go to zero for maybe like for real yield protocols that could maybe offer like a 10% to 20% return. Is it worth the risk, right? So that's why they're
right.
like, let's not take the risk. Let's just dump. There's high rewards for ETH right now, right, on these real yield platforms. So let me just deposit ETH, which I'm bullish on, and dump whatever is given to me, right? And receive the rewards while being exposed to ETH. Right? And there's a lot, like there are some protocols that offer single-sided yields, right? And those are the ones that have been doing good the cycle. For example, there's Pandle, right? Pandle, like they have like
Right.
single-sided for ETH, where you earn like 40 or 50, something crazy like that, right? So yeah, like that's the thing. That's the problem with a lot of the protocols, trading protocols are facing right now, and that's why you see a lot of the tokens just trend to zero.
Do you think Ethereum will continue to dominate the smart contract space?
Yeah, I mean, if like we actually get some mainstream adoption, then Ethereum is definitely the one to go to, right? Like there's Solana and all these things, but like we like specifically us at Strike, right? We have this. We want to follow the ethos of Ethereum. Just decentralization is number one, right? Security and decentralization is number one for sure. Like you can, there's always trade-offs for speed and stuff like that, but I think like Ethereum is definitely succeeding in its vision of like having a multi-chain type of a vision, right? Like having L2s basically doing like the transaction. I think now there a lot of the L2s are like having their own L3s and stuff, right? So yeah, like definitely an Ethereum bull. Like I'm not that knowledgeable about the infrastructure side. I'm more of like the
Dab
the
side,
DApp
maybe.
side, right? Yeah, the
Right.
DApp side exactly. So I definitely like Ethereum, just the community as well and stuff like that. And I think like a lot of the builders, the real builders, there's definitely some real builders also like on Solana. Don't wanna put them aside or anything, but like I don't know, like I've been always like with Ethereum and everybody that's building on Ethereum, and like I don't know, like I feel like everybody's based over here
All the
for
cool
some
stuff are
reason.
happening on Ethereum. Yeah, for
Exactly.
sure.
Yeah.
All
there,
right.
there, are, there
Well,
are there are some stuff happening over there. It's just that I don't know. Like I
it's
don't
less
see it.
enticing. Yeah.
Yeah, exactly. A lot of the protocols, why they launch on the EVMs is because here is where the VC funds are. Here are where the users are, right? So any new innovation is gonna most likely happen here on the EVMs more than Solana, right? Solana, in terms of like VC funding, I think it's a lot less than Ethereum.
For sure. Yeah. Yeah. I hope Ethereum continues to do well, and yeah, especially with the ETF as well. Um, I think the whole ecosystem will probably continue to perform at the very least. Maybe we'll break out of this range finally at the end of this year, hopefully. We get some positive flow. So
We can hope. We can
we can hope,
hope.
and pray. All right. Well, thank you so much for coming on. It's been a pleasure having you. Thanks for the insights about Strike and option space, and hopefully we'll have you on again in the future. Thanks for coming on.
I appreciate you having me on, and yeah, like I mentioned, right, like Strike is definitely like it's gonna be a core builder on top of Superseed, and we're excited for the launch date. We're gonna be there, and we're gonna hopefully have all the protocols being on our platform, so anybody can trade options on any token, right?
Right. Well, we're excited to see you guys there. So until next time, take care. Peace out.
Cheers. Ciao.